OPEC Plus producers failed to agree on the output levels and postponed their meeting to November 30. According to news media, Saudi Arabia and its allies are again embroiled in a dispute over output quotas for African members, Angola and Nigeria. Investors believe that Saudis may review the voluntary cut decision and sharply boost supply. Markets remember that this was the case during the pandemic. Oil prices plunged, with the sellers being forced to pay extra when selling futures on American oil amid high costs for oil storage. Fears of an oil glut in the market led to a short-term descent in Brent crude. The quotes briefly fell to $79 per barrel before bouncing back. At the moment, the oil market appears to be in a wait-and-see mode. Thus, the benchmark is expected to spend some time trading sideways between the levels of 80.50 and 81.80. The market is also mulling over the news that this weekend Israel and Hamas may conclude a ceasefire agreement. In this case, global risks will fade, thus dragging oil prices down. Until then, the market is likely to remain range-bound, and the news of a possible ceasefire between Hamas and Israel has not affected gold yet, but caused a local surge in trading activity. According to the chart, gold futures are moving just below the psychological level of $2,000. The lack of a full-fledged correction indicates that market sentiment is still bullish. The $2,000 mark has already been broken, so price consolidation above it is just a matter of time. Gold traders are more concerned about potential rate cuts by major central banks, although the minutes from the Fed's most recent meeting showed that policymakers advocate keeping monetary policy restrictive. Markets still expect the US central bank to start slashing interest rates as early as March next year. Elsewhere, the European Central Bank is apparently done with rate hikes, with some investors anticipating the first rate cut next April. And the Russian currency is still trading around the 88 mark, although the dollar-ruble pair has recovered slightly after a prolonged decline. There are no dramatic shifts in the market. However, return above the level of 90 may be a primarily technical signal of a trend change. Until then, the greenback will probably remain under pressure. Given fundamental statistics, the ruble will most likely gain value. Following Putin's decree on the mandatory sale of export proceeds and amid the upcoming tax period in Russia, the volume of payments to the budget in rubles is growing at a rapid pace. In addition, Russia has reported a decline in imports, which also supports the ruble. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.